You are listening to Uranium Spotlight, your weekly podcast on the forces shaping the global uranium fuel market, sponsored by PurePoint Uranium Group. Uranium Spotlight isn't just a podcast, it's a platform. Visit purepoint.ca to access in-depth market briefings, sector analysis, and the inaugural Behind the Curve report, understanding when and how the uranium market turns. If uranium matters to you, you're in the right place. And now, your host, Chris Frostad.
It's June 30th, 2026, and this week on Uranium Spotlight, the uranium market closes out the first half of the year with the spot price easing while the long-term price continues to strengthen. Canada and the United States move closer on nuclear strategy, but still face a looming uranium supply challenge, and Paladin Energy makes another significant high-grade uranium discovery at Patterson Lake South. The uranium spot price opened last week at $85.90 a pound U3O8 and closed Friday at $85.05, down 85 cents on the week. While the modest decline erased most of the previous week's gain, the more important development came in the long-term market, where the long-term uranium price increased another dollar during June to $94 a pound. That growing gap between spot and long-term markets continues to reinforce one of the most important themes in uranium today. The spot market remains relatively quiet, with buyers purchasing only near-term requirements, while utilities negotiating long-term contracts are increasingly recognizing that future uranium supply will require higher prices. Throughout June, we saw little change in the market's underlying fundamentals. Governments continued announcing ambitious nuclear expansion plans, Western countries intensified efforts to secure domestic and allied fuel supplies, and exploration companies continued reporting encouraging drill results rather than meaningful additions to near-term production. At the same time, the Western uranium supply chain continues to tighten. Russia and China have strengthened relationships with several of the world's largest uranium-producing nations, while Western utilities increasingly find themselves competing for production from politically stable jurisdictions such as Canada and Australia. The steady rise in the long-term price suggests utilities understand this reality. While they may not yet be aggressively buying in the spot market, they're signaling through long-term contracting that future pounds will likely command considerably higher prices than those available today. For investors, the key takeaway is that little has changed in the broader uranium story. The spot market may continue to fluctuate from week to week, but the long-term market continues pointing in one direction. As reactor construction accelerates around the world and utilities move to secure future fuel supplies, the incentive price required to bring on new uranium production appears to be steadily moving higher. Canada and the United States are moving rapidly to expand nuclear energy, but both countries now face the same fundamental question: where will the uranium come from? Both governments have recently committed to building 10 new large-scale reactors. Canada has also announced plans to increase uranium production and double exports between 2027 and 2034. The United States, meanwhile, has committed loan support totaling $17.5 billion to help Westinghouse and Cameco build 10 new reactors. Yet while the plans focus heavily on reactor construction, they say remarkably little about where the fuel will ultimately come from. Canada's strategy openly recognizes that the uranium market is increasingly divided into Eastern and Western supply chains. As geopolitical tensions continue to reshape global trade, securing reliable Western uranium supply has become a strategic priority. Canada has already been strengthening uranium relationships with countries throughout Europe, yet relatively few agreements have been announced with its largest trading partner, the United States. That creates an interesting contradiction. The United States possesses substantial uranium resources estimated at roughly 1.2 billion pounds, recoverable at prices around $100 a pound. But current production remains only a fraction of what would be required to supply both its existing reactor fleet and the significant expansion now being proposed. Another important development is the growing role of Canadian engineering company AtkinsRéalis. The company has submitted its CANDU 6 reactor design for approval by the U.S. Nuclear Regulatory Commission, while also positioning itself to support Canada's own nuclear expansion. That matters because CANDU reactors require natural fuel rather than enriched fuel. Cameco already possesses one of the world's most integrated nuclear fuel businesses, spanning uranium mining, milling, conversion, and fuel fabrication. Together, the two companies could establish a large North American nuclear fuel supply chain that reduces dependence on enriched services and strengthens Western energy security. The challenge, however, remains uranium supply. Canada intends to expand uranium production. but is also planning to increase domestic nuclear generation, while countries such as India continue seeking long-term Canadian uranium contracts. At the same time, Australia continues limiting uranium development in much of the country, while Russia and China continue strengthening their influence across several of the world's largest uranium-producing regions. For investors, this matters because the discussion surrounding nuclear energy is increasingly shifting away from reactor construction and towards fuel security. Building reactors is only part of the equation. Securing reliable uranium supplies for the next 40 to 60 years may ultimately prove to be the greater challenge. Companies capable of producing uranium within politically stable Western jurisdictions are becoming increasingly strategic assets as governments begin looking beyond today's requirements towards the fuel needs of tomorrow. Paladin Energy announced another significant exploration success last week with the discovery of a new high-grade uranium zone at its Patterson Lake South project in Saskatchewan's Athabasca Basin. The new discovery, named Atlas, lies approximately 3.5 kilometers south of the Triple R deposit and about 4.5 kilometers southwest of its last year's Saloon East discovery. Confirming that Paladin's exploration strategy is identifying multiple mineralized corridors across the broader property rather than relying solely on expansion of the existing resource. The results are very impressive. 7 of 8 exploration holes intersected significant uranium mineralization, with several returning substantial widths and grades. The discovery hole intersected 17.5 meters of composite uranium mineralization, including 8 meters grading 1.75% U3O8, highlighted by 3 meters averaging 4.25% U3O8. Follow-up drilling continued to demonstrate continuity, including intervals of 14.5 meters grading 1.7% U3O8 and 11 meters grading 1.79% U3O8 in subsequent holes. Perhaps more importantly, Atlas remains open both along strike and at depth. The discovery also validates the company's systematic exploration approach. Following a detailed ground geophysical program completed last year, Paladin identified a previously untested anomaly along the Saloon trend. Rather than immediately focusing on expanding Triple R, the company tested an entirely new target and has now added what appears to be another significant high-grade discovery to the Patterson Lake project. For investors, this matters because major uranium deposits are rarely defined by a single drill program. They're built through disciplined exploration, improved geological understanding, and the ability to identify multiple mineralized systems within the same district. Atlas demonstrates that Patterson Lake South continues to deliver exactly that. Combined with ongoing resource conversion drilling at Triple R, the project is evolving from a single deposit into what may ultimately prove to be a much larger uranium camp. In today's uranium market, where high-grade discoveries remain exceptionally rare, that's exactly the type of exploration success investors should be watching for.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to the latest developments shaping the uranium fuel market and its role in the global energy landscape, sponsored by PurePoint Uranium Group. While our passion for the sector is undeniable, nothing discussed here should be considered investment advice. Our mission is to provide a clear, balanced view of the forces influencing uranium prices and the nuclear fuel cycle. For deeper analysis and market briefings, visit purepoint.ca. Join us again next Tuesday for another edition of Uranium Spotlight.